Good morning and welcome to ForexTV.com's AM Forex New York. Today is Thursday, November 15th. I'm Caitlin Sisney. The yen snapped 2 days of decline, strengthening against all 16 of the most active currencies, as a drop in global stocks encouraged investors to trim holdings of higher-yielding assets bought with loans from Japan. Yen is trading at 110.62. The UK pound reversed its gain against the dollar and the euro after a report showed retail sales fell for the first time in 9 months in October. Sterling is trading at 204.57. Meanwhile, euro is trading at 146.28. This morning, we're joined by Heather Mitchell from Options Express. Heather, can you give us your short-term outlook for the Forex market?
Good morning, Caitlin. Strong midweek resistance at 147 even is preventing a further run-up for the euro-US dollar pair, but traders continue to keep the uptrend intact. Monday presented some early buying opportunities for the euro as the market dipped below 145.30 for the first time since November 6th. Traders nimble enough to get long saw bullish momentum expand, even in the face of technically overbought price levels. This is not new territory for the market, as the euro-US dollar pair has a history of ignoring technical indicators and forging its own price path. Fundamentally, EU nations in Germany, Norway, Spain, and Italy all reported accelerated gross domestic product growth for the third quarter after poor second quarter showings. French President Nicolas Sarkozy took the EU to task in the media recently for a lack of solid monetary policy compared to several other nations, and had critical words for the current European Central Bank policy as it's limiting economic growth for his country. It appears the recently elected president is campaigning to have interest rates lowered to help foster economic expansion in France. However, it is important to note that the principal function of the ECB is to battle inflation, not necessarily to craft policy to control the strength or the weakness of the euro currency. The next ECB rate decision is scheduled for November 22nd, with expectations for a rate increase growing. Just how much influence Sarkozy has on the central bankers remains to be seen, however. Volatility has seemingly touched every currency this week, with a sharp downside price movement in crude oil factoring into the gentle pullbacks in both the Canadian and Australian dollars. However, the most violent price swings battered the dollar-yen pair. The on-again, off-again attractiveness of the carry trade in this pair has caused significant high-low ranges, as savvy Japanese investors find ways to make their savings work harder. Though somewhat overlooked in terms of its ability to move the markets, the investing public tends to flex its muscle when it acts independently of large banks and government or institutional trading by moving away from the paltry 0.5% interest offered by the Bank of Japan into higher-yielding currencies and investments abroad. The yen carry trade phenomenon can do some strange things in foreign exchange. The speed at which these trades are established and unwound cause an irrational boost at the U.S. dollar prices against the yen, contradicting the dollar's softness relative to every other currency. Dollar-related data this morning includes the core consumer price index for October, a favorite inflation barometer used by the Fed. Median expectations call for an increase from 2.1% to 2.2% compared to last year, and unchanged at 0.2% from last month. Sharp increases in CPI in short periods of time can be an indication of inflation on the horizon. CPI represents today's dollar event risk, as the markets will likely react if the actual number deviates from the expected 2.2%. Currently, euro-US dollar trades 146.30, dollar-yen trades 110.60, Aussie-US dollar trades 89.25, and dollar-Canada trades 97.10.
Thank you, Heather. That was Heather Mitchell from Options Express. I'm Caitlin Sisney. Join us again later for another update right here on ForexTV.com.